Very good. Well, honorable members of AFI, distinguished governor from Central Bank of Papua New Guinea, AFI members, colleagues, friends, it is to me today, as a member of AFI's senior management team, to welcome you to this important side event on inclusive green finance and financial stability. We have a dedicated team of AFI colleagues here who have told me two things. They told me keep my remarks very brief and to speak very loudly, and I will try to do both. I'm actually happy to be brief because it will give you more time to engage with our distinguished panel of policymakers who are there before you and whom Johanna will introduce shortly. But if you will allow me, after a long journey that many of us had this morning, going from blue to green and then back to blue, if I may just pause here and have an aside. We're now well familiar with the proverbial COP buggies, and I'm going to use one of these buggies to transform you back in time. Yeah? I'm not going to take so long to do it, and not take you so far back, to about 2015 or 2016. And this is a time when AFI members are looking at the situation in their countries and in the world. And they are observing that climate change is impacting their economies, that climate change is risking their financial stability and social peace. And they're asking themselves, what can we as financial regulators do? What policy levers can we employ to support climate change adaptation and mitigation? Then we jump to 2017, not too far forward, and this is when together AFI members endorsed the Sharm el-Sheikh Accord on inclusive green finance. And the term inclusive green finance gets coined by AFI members. What does that mean? That means that when we look at green finance flows, foremost, our members are looking at ways to make sure that the benefits of these finance flows impact and benefit the most vulnerable, those at the front, in the front lines. Now we jump to 2022, where we, together with the University of Luxembourg ADA chair, launch the Inclusive Green Finance Roadmap. And that brings us very quickly to today. And today we're proud to say that we have member institutions, central banks, other financial regulatory institutions in more than 60 countries that are working on these issues together. And you will hear from 4 of them today: Nepal, El Salvador, Philippines, Papua New Guinea. We hope that you find their insights as inspirational as we do in AFI. And we encourage you to also engage with them and to ask questions. Well, before I end my very quick remarks, a few special thanks are in order. First, to the government of Luxembourg for offering this venue to us at the Benelux Pavilion. Thank you very much. Next, to our funding partners who have shared both the vision and the aspiration to us from the very beginnings up to today, starting with the German government's BMWK, but also the French Development Agency, Canada's IDRC, and Climate Works, among others. Next, we want to thank our co-host for this event, the ADA chair at the University of Luxembourg, and Professor Zici is here with us. And finally, I wanted to take a moment to thank all of you, our friends, our partners, our co-navigators on this road that we lay forward together. Your contributions, your collaboration, your knowledge exchange with AFI and our members is absolutely vital as we look to the challenging period ahead. So thank you very much to all of you. And with this, I am happy to hand the mic over to Johanna Newman, Head for Inclusive Green Finance in AFI, who will introduce the next speakers. Thank you.
Thank you very much, Ilya, for that introduction, and thank you for joining us for this side event on inclusive green finance and financial stability. It's now time for our keynote remarks. We have a great pleasure to have the acting governor from the Bank of Papua New Guinea, Elizabeth Genia, with us today. The Bank of Papua New Guinea is one of the champions of inclusive green finance within the AFI network and have done some truly amazing work on an inclusive green finance policy and green finance taxonomy in the last 2 years. Governor, it's a true pleasure to have you here, and the floor is yours. Thank you.
Thank you. Good afternoon, ladies and gentlemen. I acknowledge the distinguished guests from all around the world joining us in this important occasion. It actually augurs well for the future of the sustainable global economic development when so many countries are taking a strong interest in these issues. Papua New Guinea as a nation has started what will be an ongoing journey, the movement towards a sustainable future. Today's topic, the relationship and interaction between inclusive green finance and financial system stability, strikes a very strong chord with us. But before we talk about money, we must appreciate what the real issues are. First and foremost, we must concentrate on how our communities function and what has to happen for them to thrive. We must aim to build an inclusive society that allows for the individual to participate fully in all aspects of life, reflecting the value that is placed on equality and on fairness, and is testament to the fact that inclusiveness makes all of us stronger. We are measured as a society by how we treat our most vulnerable people, and we look around the world, wherever you see a thriving community, you will find inclusiveness at its core. Now, the very nature of Papua New Guinea has made it very difficult, PNG, if not impossible, for many Papua New Guineans to achieve a reasonably comfortable standard of living or be able to participate in all aspects of life. Thanks to the geographic challenges such as our rugged mountains, ranges, the dense tropical forest, and huge river systems, infrastructure in our country is limited. PNG, for those of you who don't know, is on the eastern half of island New Guinea. We are home to one half of the world's largest tropical rainforest that has traditionally sustained indigenous communities, but is now under threat from unsustainable logging, disturbing the delicate balance that nature provides to ensure the survival of these species. Our Western Highlands and the Sepik Plains are home to some of the most fertile land on Earth, with vast potential for food production and sustainable agriculture development. We actually have a food basket that is relatively untapped in terms of its potential contribution to food production in the region. And this was evident in recent El Nino drought event in 2015-2016, when upwards of 500,000 people were affected by the drought that led to the failure of sweet potato cropping in particular. Again, PNG occupies 1% of the world's landmass, but is home to 7% of the planet's biodiversity. A significant challenge when it comes to climate change, yet presenting a unique opportunity with inclusive green financing to effectively address this challenge. Around 95% of the population live in rural and remote areas. Over 70% of our people are subsistence farmers. In many places, there is no main powers, no safe roads or bridges, and access to important services such as food stores, medical clinics, and reputable banking arrangements may be a few days' walk away from their village. While education is generally a very strong priority in PNG families, access to well-equipped schools tends to be limited to larger towns and cities. Natural disasters such as earthquakes, volcanic eruptions, and tidal waves are frequent, placing incredible pressure on subsistence livelihoods. Now, if PNG is to move forward towards attaining a higher average standard of living, achieving financial stability will be a key requirement. In our society, our interdependence exists between inclusion and stability. To function properly, the nation's financial system needs to take into account how financial inclusion supports and promotes financial stability, and how financial stability relies on all members of society being included. The journey towards a sustainable future started with the realization that unless all Papua New Guineans have access to fair basic financial services, regardless of where they live, the nation cannot achieve sustainable economic growth. And without sustainable economic growth, financial stability is unlikely. The architects of PNG's financial inclusion movement came to a further realization. Financial education has to walk hand in hand with financial inclusion to build a level of financial literacy within the population. And PNG has been working to achieve financial inclusion over a decade now. From its modest beginning as a project with the central bank, within the central bank, the Bank of Papua New Guinea, financial inclusion is now a national strategic priority. Activities are coordinated through the Center for Excellence in Financial Inclusion, called CEFI. Tens of thousands of individuals have participated in financial education activities around the country over these years. And so now financial education has expanded to include training potential business operators and aspiring entrepreneurs. And that's all good news. However, as the impact of climate change becomes stronger and more destructive, and we experience more and more extreme weather events, not only is there an urgent need for climate resilience and adaptation measures to protect those most at risk, we also need to take action to preserve financial stability. This means we now have another key for the central banks to play. Focusing on climate change as a major influence on central bank decision represents quite a marked change in mindset. Certainly in the past in Papua New Guinea, the issue of climate change and its potentially disastrous effects on economy have not been taken into account as a key factor in the monetary policy formulation process, nor in the area of financial system stability. Prudential standards and risk management guidelines to the financial industry have concentrated on other important factors, as we know, mainly to protect the financial institutions from loss, guide them in minimizing risks, ensuring soundness, and maintaining sustainability and profitability. Given that climate change disasters expose financial institutions to much bigger risks, it should now be the starting point for reviewing and considering policy. Clearly, climate change poses a serious threat to financial stability. We must look to financial inclusion on a much broader scale to strengthen resilience and enhance the ability of rural communities and vulnerable areas to adapt if they are to survive and thrive. Yes, we will need to educate our communities on basic money issues and encourage them to open bank accounts. But fundamental financial education will always have a place in creating a financially aware population. But as the rate of climate change does not seem to have slowed, we need to increase the pace of finding ways to combat its financial impact. For example, we can look at to expand the availability of devices that each individuals to meet the Know Your Customer guidelines in locations that have limited or no infrastructure. As we need to facilitate the development and market rollout of technologies such as the Digicen Bank ID product that recently graduated from the Bank of Papua New Guinea's regulatory sandbox and introduced into the PNG marketplace. In recent years, there has been a growing recognition that economic activity related to environmentally friendly and socially responsible projects has the potential to lead the way towards sustainability and resilience. Green finance is the key. I like the simple definition. Green finance refers to financial investments and initiatives that promote sustainable economic growth while reducing environmental impact. So our green finance journey began in 2021, just recently, when the Bank of Papua New Guinea engaged with the Green Global Growth Institute to develop an inclusive green finance policy. We launched the Papua New Guinea's inclusive green finance policy in June this year. As I understand it, the first of its kind in the Pacific. The policy includes the roadmap for the next 3 years and the green taxonomy, which sets out 11 key categories to identify greener investments. This range certainly gives us plenty of scope to consider which viable directions PNG can take on the journey to sustainability and financial stability. In July this year, we signed a letter of intent with the French Development Agency and GGI for a refinancing facility to support loans from PNG's commercial banks identified as having low carbon emissions. Our next step is to launch an inclusive green finance center within CEFI, highlighting the symbiotic relationship between financial inclusion and green finance. The inclusive green finance policy will guide the way we help green finance participants. For example, the Bank of Papua New Guinea will help track the economic benefits achieved through green finance initiatives by monitoring green finance portfolios and measuring proportional increases in the sector. We will also continue to develop the sector. For example, we will investigate the possibility of attracting international funding to refinance lending portfolios with a greener profile. And we will continue to take a collaborative and cooperative approach to knowledge sharing about green finance issues with other international network partners. The Bank of Papua New Guinea expects all the PNG-based financial institutions to contribute, support and commitment by embracing the concept of inclusive green finance and actively participating in the implementation process. Initially, the Centre will work with 3 financial institutions to educate their staff on the business case for green finance, implement the green taxonomy, and provide technical assistance to design green finance products. The short-term goal is to share the findings from working with those initial 3 institutions with wider financial services industry, so effective practices can be replicated and adopted. Individuals and MSMEs will also have access to education about sustainability and environmentally responsible lifestyle choices, as well as information about green financing. Already we are seeing examples of this. There has been a notable increase in the pay-as-you-go solar kits in our rural areas. Improved digital payment platforms and mobile phone access, combined with the increasing availability of easily transportable solar kits, and an average of 300 days of sunshine a year is resulting in a wider use of a reliable source energy with lower carbon emissions. With reliable power becoming more readily available and digital platforms being improved, smartphones are starting to raise the level of participation in the formal financial services sector in rural and remote areas. So we see this digital delivery channel as a potential growth area for green products and green finance, and a significant step forward towards environmentally friendly practices. It is estimated that 85% of adults in the world have access to a smartphone, and just over 75% adults have a bank account. We still have some work to do, and we need to continue to promote green products and green finance through financial inclusion, digital delivery channels. A significant step forward was taken just 12 months ago at COP27 with the launch of Roadmap Inclusive Green Finance by AFI's Inclusive Green Finance Working Group. The Inclusive Green Finance Roadmap recognizes the role that regulators and financial institutions have in helping communities to build resilience and take adaptive and corrective measures at the local level that combine to have an impact on a global level. The AFI's roadmap is a very welcome development from a regulator's point of view. Participants from around the world shared their thoughts on how financial inclusion be used to enable vulnerable people to combat climate change, and how central banks and regulators can contribute to climate action. The roadmap also acknowledges that inclusive green finance framework is not a one-size-fits-all policy, and it needs to be adapted to work within the unique economic, social, and environmental context of each region, which sums up why we are all here today. To learn about how we can take significant step forward towards more environmentally friendly practices, particularly in relation to financial issues, to be inspired by examples of inclusive green finance initiatives that are addressing the effects of climate change and other environmental disasters, and to share with each other how our nations are working towards embedding green finance principles, policies, and practices in our social and financial cultures. Ladies and gentlemen, I look forward to sharing the discussions. Thank you.
Thank you very much, Governor Ginia, for sharing those insightful remarks. And so important to highlight inclusivity. In so many of the green finance discussions so far, there's a focus on large-scale adaptation and a large-scale mitigation, but really talking about the individuals, the MSMEs impacted by climate change, and how to ensure that they have resilience, that they can be a part of a just transition. This is the conversation we will be having here today, to truly look at the inclusive elements of green finance. I'm really excited to have a very knowledgeable, distinguished panel with us today. We will be discussing the links between inclusive green finance and financial stability, but also sharing concrete examples from the countries, from the central banks that are represented in the panel discussion today. So let me briefly share introductions, and then we will dive into the conversation. So we have Dr. Gunakar Bhatta, the Executive Director for Banks and Financial Institutions Regulation from the Nepal Rashtra Bank. we have Minard Mojika, a Deputy Director of the Policy Development Group, Financial Inclusion Officer of the Banco Central and Filipinas, the Central Bank of the Philippines, and Gabriela Vieira Pineda, Investment System Administrator, International Reserves Department from Banco Central de Reserva del El Salvador. And then we have Professor Dr. Dirk Zetze, other chair in financial law, inclusive finance, from the University of Luxembourg, and also a co-host of this event. So before we start, let's give them a round of applause. So we will start with you, Dr. Gunakar, and Nepal Rashtra Bank. You also had quite a journey on inclusive green finance in the recent years. So my question to you would be, why is climate change a critical consideration in financial inclusion? And you're currently finalizing your green finance taxonomy. How will this guidance document support inclusive green finance initiatives in the country?
Thank you. Thank you, Afi, and the organizers for providing this an excellent opportunity to be here. As you know, Nepal is a country of mountains. It has a diverse topography. There is mountain, hills, plains, lies in the lap of Himalayas, and between two giant neighbors, two big neighboring economies, China and India. So the climate change is a tough challenge and emerging issue for Nepal as well. There is irregular rainfall and melting mountains. These pressures might create a lot of challenges in protecting the environment. Biodiversity, environmental protection will be a major challenge for Nepal, particularly given the pace of the industrialization in the neighboring economies. If we see the recent example, 30 years ago when I was in Kathmandu, the capital city of the country, in the winter it was cold, but now these days even in the winter it is getting hotter. So it clearly shows Nepal is experiencing the impact of the climate change. The vulnerable section of the society, the poor people who are already in the problem of the income inequality, the livelihoods, they might be suffered more because of this climate change. Recently, few months ago, there was a huge earthquake in the western part of Nepal, and largely those people who are below the line of the absolute poverty, they have been stricken. So it clearly shows the natural disasters that is going to create huge challenge for the vulnerable sections of the society, marginalized people, the poor people. So in this regard, how the financial inclusion can be important instrument to protect those people or to uphold their pride in the the situation of the extreme weather events. So the insurance products may be one of the major instruments where we can help them to absorb shocks. Nepal has made some efforts, micro insurance efforts, but we have to the wider coverage. We have to have the wider coverage of that micro insurance so that we can have the protection of the people if in the case of the natural disasters, if they lose their property, if they lose their cattle, or if they lose their crops. Floods, droughts, these are the recent phenomenon. Few years ago, few decades ago, they were not as widespread as they have been observed in the last few years. So the insurance through the financial inclusion, one of the agenda for the financial inclusion is to have the wider coverage of the insurance for the poor people, for the marginalized section of the society. Though the government is making some efforts, but we have to have some kind of the international experience sharing, have some kind of the international expertise, how those insurance products can be built for the targeted people, for the marginalized people. Similarly, Nepal has made some efforts to bring in some of the people in the securities network, particularly the government securities, similarly the bonds, the social security. Through the products of the securities market, For example, people who have been abroad for earning, for the work, who are sending remittance to Nepal, there is some kind of reservation where they can subscribe minimum shares. Some minimum securities are guaranteed for them. So this could be one of the avenues which we can broaden and people can have the participation in the securities market. And moreover, the entrepreneurship of the people who lose their jobs, who lose their crop, who lose their property because of the natural disasters, to enhance the entrepreneurship or to regain the entrepreneurship, we are having the access, we are bringing the access, widening the access of the banking network in the nook and corner of the country. Few years ago, 5 years ago, in all municipalities there was no bank branch, but of late there is bank branch in each municipality. We have 753 municipalities after the federal setup, and 5 years ago only around 300 municipalities had one of the bank branches. And similarly, we are expanding the banking coverage through the digital payments. Digital network is emerging after this COVID, and central bank as well as the banking institutions, they are the helping people to have the access to the digital payments. As Johanna rightly mentioned, Nepal is finalizing the green taxonomy draft. Thank you, Alliance for Financial Inclusion and other donor agencies who are supporting to have that green taxonomy. So the green taxonomy is going to be one kind of the national ownership document. Right now, the Central Bank of Nepal, Nepal Rashtra Bank, is leading to design that green taxonomy with the support of the AFI, where we have bring in other regulators, the Securities Board of Nepal, the Insurance Authority, and some of other government agencies, the Ministry of Finance, Ministry for the Forest Conservation. These are also the part of the design of the green taxonomy. With the design of the green taxonomy, we can promote more financial flows to those areas which promote the green. So the green washing, we can control to a large extent with that green taxonomy. Already we have some kind of the rules, some kind of the directives where banks have to adopt, banks have to allocate certain percentage of credit to the energy sector, certain percentage of credit to the MSMEs, certain percentage of credit to the agriculture sector. And once this green taxonomy is designed, later on, I think after a few years, we can have some kind of the directive to the banks. If they go for the adoption of the green, pure green, then there can be some incentives in the risk weight, there can be some incentive in other, the regulatory directives on regulatory issues. So these could be some of the avenues. So the green taxonomy, one of the major documents which will have also will help to bring in climate finance to Nepal. Thank you.
Thank you very much, Dr. Gunakar, and we're very excited to see after the taxonomy as well, what, after the definitions are put in place, what are the concrete mechanisms that can be developed to then channel the finance to the populations that are vulnerable, that you also mentioned. We will now be moving on to the Central Bank of the Philippines and Minard. You've been on the green finance journey for quite a long time, actually, from BSP side. And my question to you would be, why should financial inclusion be discussed alongside financial stability? So the core of the question we're trying to answer here today. And how does BSP interpret its mandate on financial inclusion vis-a-vis financial stability? Over to you.
Thank you, Johanna, and sorry. Thank you, Johanna, and thank you, Afi and University of Luxembourg for this opportunity to be part of the panel. So to answer your question, why should financial inclusion be discussed, and maybe even why should it be pursued alongside financial stability? It's because these two policy objectives, we believe, can be mutually reinforcing under the right conditions. So inclusion can support stability, and stability can support inclusion. And there are many pathways by which we can see how the two reinforce each other. And by the way, when I talk about stability, I'm talking about micro-stability, so the safety and soundness of the individual institutions, as well as macro, where the stability of the system as a whole. So how can inclusion support stability. So in terms of deposits, for example, because of financial inclusion, we have deposits not only from the large depositors, but also from the small depositors. And these retail deposits provide a stable funding base during times of crisis. In terms of loans, because you serve a lot of sectors, there's more diversified loan portfolio, and that could lessen concentration risk and ultimately improvement of credit risk and financial stability. So it's the other way around. How can stability support inclusion? So if there is financial stability, people will trust the financial system and they will use the banking services. They will use formal financial products and services instead of informal channels. But actually, there are also trade-offs. If the link between the two is not properly managed, so for example, what is the trade-off from inclusion to stability? If lending to some unserved or underserved sectors is not prudently managed, that could lead to increase in non-performing loans, and that could be a threat to stability, and that's something that the IMF has already pointed out. How about the threat from stability to inclusion? So for example, if there are regulations that are not proportionate or not implemented risk-based, then financial institutions may opt to de-risk or reduce their exposures to some sectors that are perceived to be risky. And that may be true in the context of climate change. So for example, if there are regulations on sustainability, including, for example, disclosure requirements, and this will not be implemented with proportionality, some financial institutions may opt to de-risk or not serve sectors that they believe would be polluting or not yet green sectors, and this may include low-income population, agriculture, and MSME sectors. So, of course, the story that we want is inclusion to stability in the context of climate change. It's that the low-income population will have access to resilience-building tools like microinsurance, that's pointed out in Nepal, and they also have opportunities to transition to green. And because of that, they become resilient, and this contributes to the overall economic resilience. And then this will, because of this economic resilience, this will have less risk to the financial sector. So that's inclusion to stability. Now, on your next question, Johanna, on how do we interpret our mandate on inclusion in relation to stability? We know that in the developing world, the central banks are focused on their main mandates on, in the developed countries, the central banks are focused on their mandate on financial stability and price stability. Maybe because financial inclusion is no longer a problem in the developed world. But in developing economies like the Philippines, so we're also hit by around 20 tropical cyclones in a year. We're in the Pacific Ring of Fire, so we have very active volcanoes and a lot of earthquakes. So financial inclusion is very important. So we pursue financial inclusion alongside our mandates on stability. Of course, we also complement inclusion with consumer protection and financial education. It's like promoting stability without inclusion is like you're building the strong foundations of a house, but not everyone is living inside. But if you're promoting inclusion with stability, it's about you're building the strong foundations of a house and you're ensuring that everyone is living inside and everyone is benefiting from the benefits or from the opportunities of having that stability. And that idea is not from me. I got that from our previous governor. So that leads me to my third point, that the pursuit of inclusion, stability, sustainability is not the end itself. So there's a larger purpose. So why do we need to always put inclusion lens in stability? And now why do we need to put an inclusion lens in sustainability? It's because we want shared prosperity where no one is left behind. And that's exactly why in the AFI Global Policy Forum held just this September in Manila, that's the main theme. It's about inclusivity, sustainability, and stability for shared prosperity. And the AFI members even committed to a declaration. It's called the Manila Manifesto. And it's the commitment of AFI members to engage with the global standard-setting bodies on stability. And maybe moving forward, we will also need to engage with the global standard setters on sustainability to discuss how these global standards will affect the implementation of financial inclusion in developing economies.
Thank you very much, Minard, and I couldn't agree more on the engagement with the standard-setting bodies. Proportionality is so important, and we want all these green standards to come along, but with the right form of implementation to include there's no exclusion as a result of it. And I must say, I really love the way you described, or your former governor described, financial inclusion. This is an excellent way of looking at it. Thank you so much. Now over to the Central Bank of El Salvador and Gabriela. First of all, why is inclusive green finance important for the financial sector in your country? And second of all, the Reserve Bank has done some really exciting work with the demand-side survey, going out to individuals and households and asking them questions around financial inclusion and climate resilience and climate mitigation. So if you could share a little bit about that demand-side survey as well, and the main findings, because I think this is a really new approach on how to collect data around inclusive green finance, and something I'm sure everybody is excited to hear more about. Thank you.
Thank you. Good afternoon, everybody. First of all, I would like to say thank you to AFI and Luxembourg for this opportunity. We are really happy to share our experience like a country. So about the first question, we know that climate change is a phenomenon that has negative effects on different areas of the economics and life of the population. So especially the most vulnerable, and El Salvador is classified as a vulnerable country when it's come to climate change. These environmental challenges greatly increase the need to move towards a green and sustainable economy and involve large amount of financial resources. So on the other hand, central bank and regulators play an essential role in climate change, especially for financial stability. So it is important that they recognize the need for cooperation to address this important challenge. The Central Bank of El Salvador has as a part of his mission to ensure the stability of financial system by contributing to the economic and social development of the country. For this purpose, includes green finance is being incorporated as one of his strategic actions. It is therefore clear that El Salvador financial sector has the capacity to contribute to sustainable transition by providing funding for green project activities, environmental and social impact investment, leading to an inclusive and sustainable economy. But for this is need resource, since as we know the amount of financial resources for this objective are great dimension, especially when we consider that action must be taken in the long term. Likewise, the financial sector become a perfect channel to mobilize financing for people and sectors vulnerable to climate change, also achieving financial inclusion. As the Central Bank of El Salvador, we are leading a green finance roadmap that will mobilize resources and action toward projects that are contributing in positive way to the country's climate and environmental objectives by directly involve the financial sector of the country. The above reflection make essential the participation of the private sector and especially to the financial sector, as well an active role of the public sector, being an important tool to raise more funds and promote projects that achieve the greening of the entire financial sector. Our Green Finance Roadmap incorporates this element, and therefore the authorities of the Central Bank recently signed the Letter of Understanding for the creation of the Climate Finance Board, which involves 6 public institutions, and this has the objective to involve an interinstitutional cooperation mechanism to make action viable and boost the mobilization of financial resources and to promote of activities related of finance and sustainable investment in El Salvador. Last but not least, our Green Finance Roadmap shows significant progress to date, as several of the action plan activities have begun to be implemented. It highlights the progress in the regulatory component that currently has an initial diagnosis of existing international experience in green finance regulation, and we have the first draft that it is in a public consultation stage. Also, the taxonomy component is progressing, and the public consultation stage is about to begin, in which several of the areas involved in the subject will participate, becoming an important space for the feedback and stakeholder involvement. And about the recent finding of green element on the demand side survey, in this context, it is important to collect information on the issue of green finance in El Salvador, so that it can be input in the creation of a national road for the fulfillment of the different country climate objectives. The Central Bank of El Salvador, through a grant from AFI in 2022, it conducted the National Survey on Access and Use of Financial Products and Services with the aim of obtaining information from Salvadorians over 18 years of age to assess current situation on financial inclusion in the country. This is an update of the 2016 survey, also found by AFI. A new fact in the design of this survey in 2022 incorporated a section on inclusive green finance. El Salvador is the first country in the Americas and the second of all AFI members to have incorporated green finance into a nationwide survey with the aim to obtain information about climate events affecting Salvadorians and their resources of income, estimating loss of income from climate events, also recovery time from loss of income, mechanisms used by Salvadorians to economically confront this event, the Salvadorian knowledge about green financial products and services, the willingness of Salvadorians to purchase green financial products and services, and finally, the reason that affects Salvadorians to not acquire this financial product. So this national survey is a key information tool in El Salvador, providing a clearer picture of the current situation about financial inclusion, and in particular with regard to green finance. The result of the section on inclusive finance in the national survey reveal important input for the diagnosis of the issue in the country, reflecting that climate phenomenon affects sources of income of Salvadorians as well as many mechanisms to confront them. So the data becomes fundamental for the development of policies for the benefit of the population and sector most vulnerable to the effect of climate change. Taking in consideration the result of this survey and other research, El Salvador to the Central Bank carry out important action to promote green finance in financial system in the country. One of these efforts is the construction of the Green Finance Roadmap that seeks to establish clear lines of action to empower this issue, involving not only the financial sector, but also actors at the national and international level. So thank you so much.
Thank you very much, Gabriela. And that survey, I think it's an amazing way of laying the foundation for decision making that is not only based on ideas of how it is in reality of the lives of people, but actually basing it on how it is their own answers of how they want to cope, how they can cope with climate change, and what kind of financial products and services can be catalytic in supporting them in both building resilience, but also in mitigating their own contributions to climate change. So we're now approaching our fourth panelist. For Professor Dirk, my questions would be, why do we care about financial stability in the context of inclusive green finance? What is this all about? And based on your research, what are the challenges regulators must address when implementing an inclusive green finance policy with a focus on financial stability? Are you aware of any best practice examples? Because I know you've been engaging in quite extensive research around the links between financial inclusion and financial stability lately. So any insights or sneak peeks would also be welcome. Over to you, Dirk.
Yeah, thank you very much, Johanna. First of all, when we speak about inclusive green finance, it's important to bring this down to something that everyone can connect to. The first element most people would share these days, in particular here at the COP, is a green dimension. We all know that resources are scarce and we should do something about it and kind of adopt policies that are careful of the resources that we have and try to share them among mankind. I think it's fairly easy to be green and at the same time exclusive. You just need to apply extremely strict environmental standards and then we leave probably 7.5 billion people on the planet behind. That means they will not share in prosperity, they will starve, and they will probably also not be able to deal with all the climate risks that they're currently exposed to. So that brings the second parameter, inclusiveness, into the equation. We need to think about policies that are not only green, but also take the people with us, that allow them to go the next mile, to think about a good future for their children, but also maybe to think about long-term investments rather than traditional solutions. The traditional solution to take care of your old age is to have a very large family. Maybe the modern solution could be to invest in your education, to invest in technology that allow you also to ensure a certain livelihood independent of the support of others. So here we are touching upon two social dimensions, and I think it's also very crucial to understand that there is an implicit tension between environmental policies and social policies when we understand inclusiveness as counterpoint to very strict environmental standards. So now comes a third aspect of the equation into it, and that is efficiency. If we want to make sure that our policies are not sustainable, we rely on subsidization long term. That is not possible. We don't have that budget. So we need to bring a kind of economic factor into it. We need to have efficient projects that are at the same time inclusive and pro-environment. And when you start thinking of these projects, you first think, how shall that be? How is it possible to kind of square the circle? But in fact, there are examples, but the examples are not easy. So you need smart regulators with smart examples to convince people. One of the examples that I like best, because it also shows this implicit tension, is a very famous example, actually, from the host of the last COP, from Egypt, where there was a strong investment program supported by the Egyptian central bank to replace coal ovens with natural gas ovens. Now you would think natural gas is not really green, is it? No, the question is the benchmark. When we come from coal, natural gas is extremely efficient. It is also high impact as compared to 60,000 bakeries driven by coal ovens. And why do I use this example? Because it shows exactly this tension. Afterwards, after the central bank sponsored this type of program with credit guarantees, with all kinds of initial statements, the bakers were able to pay back the debt out of the efficiency gains that this type of innovation created. At the same time, there was a lot of carbon dioxide saved because coal is, of course, the worst of all energy sources we have. Now, what's the outcome? It's not green, but it's much better than the state before. And now this is a mindset when we think about IGF that we need to adopt. It is, if we want too much, we will achieve nothing. So we must aim at what is doable, but we must start. If we don't start, we will never get there. Yeah? And this is important as a mindset. It's very entrepreneurial on the side of the regulators. It requires smart projects because it's so easy to throw money at dumb projects. Yeah? So this is something that we need to understand. We have scarce resources, but we will only make projects with convincing, good examples. And we have plenty of these elements when we start thinking about how our economy is structured. So for instance, now from Morocco, they have a water shortage. So in this regard, thinking about water irrigation system may be very supportive to, on the one hand, agriculture, also self-sustainability of many of the agricultural society, but at the same time, it could also deal with the climate shocks that are about to come, because of course, deforestation and also the increasing growth of the desert is a major problem in these countries. But when you now look at Bangladesh, Bangladesh has an opposite problem. Yeah? They have too much water. Yeah? So in this regard, we need to tailor the policy and think about good examples for each economy, because the central bank and the regulators cannot finance all. They can only finance good, smart examples. And in this regard, it requires a different thinking, because you cannot use a blunt sword, but when we think about IGF policies, we need to look at the pain points of our country, think about what is hurting most, a very large part of our society, and how, with a kind of kick-starting investment and a smart regulatory approach, we get to this type of squaring a circle of efficiency, environmental, and positive social effects. But if we don't do it, and that's the important part, we will lose out, because we know that market mechanisms are basically pressing towards a winner-takes-all situation. That means we will have always a smaller share of the economy benefiting. Yeah? So here, it is a very, very tricky role of the regulators, and I have very high respect for all the colleagues in the AFI-IGF working group that have tried. Some of them are very successful, some of them are still struggling, but the good thing is all have started. I think this is the most important part of it. And when you think of these challenges that come with it, they're enormous. Yeah? The challenge in most of the countries we're talking about is survival. It's not thinking about the future, it is about surviving today. The other element that we also have to think about is, when we speak about the environment, I'm not sure how much you know about environmental science. I'm pretty sure we are all amateurs. That means we have to learn. Regulators are good at finance, are good in economics, some of them are good in regulatory matters, but they're of course not environmental experts, and that means they need to build expertise, and of course some countries lack the resources for doing that. So important to share experiences, share resources, make sure that we build knowledge hubs among different countries that face similar challenges. Another aspect which I find extremely important is the datafication aspect. We cannot datafy a whole economy. That's just impossible. Even the countries with the largest resources in the world cannot datafy overnight. It will take a decade, and even there, the funding is just not there. So it's important to datafy those parts where it matters most. When I have identified a pain point, I can focus on that, datafy, try to collect data, like with your study, yeah, that you start with certain elements, allocating where the most potential is, and then have a tailored policy, start small, grow from there, learn from other good examples, from other good smart projects from other countries, and this way we will have several islands of good projects which together achieve impact. Because it's not about being green, it's about impact. That's the important part. Green is not necessarily impact. Green can also be extremely harmful for society, in the sense that we have then basically a step backward, because when we lose the MSMEs as a backbone of each economy, then we will not make a progress. Yeah? We have just a kind of green on paper, but not in real life. Well, and in this regard, I want to encourage one element, which is probably already well on its way, but I try to stress it. When you move from a traditional economy to an IGF-based economy, you need an ecosystem that supports that. You need many specialists. You need someone who is good at measuring carbon dioxide impact. Another one must be very good at measuring social performance. A third one must be an advisor on drafting the regulatory framework. So that is not an easy thing. You cannot simply say we are IGF overnight, but you need to learn from different elements, you need to bring in expertise. Of course, it's costly, it's a long-term capital investment, but I'm thinking by sharing the work, by building networks, by creating a pool of expertise across the different countries, that is basically the chance how we battle with the ongoing challenge in emerging and developing economies, that scarce resources and basically also a sort of potential risk coming overnight from the environment, but maybe also from the political circumstances. All of that is a disincentive for long-termism, and a strong network of the regulators aiming at a certain time horizon of 5 to 10 years, trying to persist, mutually incentivizing ourselves. I think that is the best recipe for making progress in a world full of challenges. Because the challenges are plenty, And the good examples, I think, give us the rigor and also the conviction that we're moving in the right direction.
Thank you, Dirk. That's really encouraging to hear as well, that we are moving in the right direction. And I like what you're saying. We are not inclusive green finance overnight.
Yeah.
I think we've been working on this already for several years, and we see amazing progress. But there's a lot of work also ahead of us, and that's important to remember. At this point, I would want to ask if there's any questions or any comments from the audience. Anybody who wants to share any reflections? Okay. Everything is crystal clear. If at any point you have any comments, feel free to raise your hand as well, or just to speak up. I have another question for all of our panelists. We've been very much in this conversation. We've been inside your central banks in your countries and hearing about what inclusive green finance can be in practice, how it links to your mandate, how it links to financial stability. But right now we're, of course, in a much larger context. I've heard we are a couple amongst 110,000 here at COP during these weeks. So looking at the work you are doing with inclusive green finance, what would be your message to fellow participants here at COP, to fellow policymakers? What is the thing you want to get out there to the world, the COP that is surrounding us at this specific moment? Maybe we can start with you, Dr. Gunakar.
I think based on my experience as a central banker, there could be two approaches. One is the institutional approach, as Nepal is designing the green, resilient and inclusive development strategic action plan for 2024 to 2034, so almost for a decade. So that strategic plan is going to incorporate number of issues beyond the conventional development approaches, where the green, environmental protection and biodiversity issues can also be included. They can also be incorporated in the broaden the infrastructure development efforts. And another thing that we have made in the recent years is the environmental and social risk management guideline, which was issued in 2018. And for the 4 years, that was in the just form in the guideline. It was a voluntary, optional for the banks and financial institutions. But for the last 1 year, it has been issued as a directive. So it is going to support the ESG. And on the regulatory part, the central bank, as I mentioned earlier also, the central bank has issued directives to the banks and financial institutions whereby they have to allocate 10% of their credit to the energy sector, so which is going to support the renewable energy production and the environmental protection. Similarly, 15% of their credit to the agriculture sector and 15% to the marginalized sections of the society who can borrow only up to 10 million. So that we call the MSMEs. So in this way, 40% of the targeted credit is designed, that program is designed by the central bank. And similarly, if banks, they provide loan to the people who buy the electric vehicles, they can get loan up to 80% of their value. The loan to value ratio is 80%. But for the non-electric vehicles, for the fossil fuel-based vehicles, it is only 50% loan to value ratio. And people who are working abroad and who send money as in the form of the remittance, they can get additional 1% interest. So that type of incentive mechanism is also there. And government has also issued one that is called the national, saving security, that is targeted for those remittance senders where there is a relatively higher rate of interest, and that money can be channelized by the government for the infrastructure development as in the form of the development financing. And another effort that the directive that central bank has issued is the banks, they have to spend 1% of their profit for the corporate social responsibility. And out of that corporate social responsibility, if they can provide some around 100 rupee, Nepali rupee, to people who are going abroad for in their account to open their accounts. So in this way, they can have the incentive to open these accounts. So the regulatory approaches as well as some sort of the broader approaches can be met, and then we can have the financial inclusion that can be translated into the development efforts. But the efforts that Nepal has made so far, they are not, the complete, and they are in the initial stage. But later on, we'll have to broaden those, and we may need the support of other countries, or we may need the experience. We may have to learn from the experience of other countries. There are evolving challenges in the digital payment framework, and how to design the CBDC, things like that. These are the emerging issues. But how the digital payments can be broadened to the people who live in the, the nook and corner of the country. These, some of the experiences we might also have to learn from others, though some efforts have been made.
Thank you very much. Over to you, Gabriela.
Thank you. I think a short reflection that it is important to mention is that spaces like this are fundamental because they seek coordinated solution and international cooperation to move towards a world economy with low carbon emission, able to face the negative effect of the climate change, and also minimize impact of vulnerable sectors through a key element for the development of any strategy such a financial element. As El Salvador, and especially as central bank, we are trying to take advantage of this element and to take this opportunity and build action aimed to addressing climate change, ensuring that our population can meet their needs and the future generation also can meet their needs. So thank you so much again for this space, and this is my final. Thank you.
Thank you, Gabriela. And over to you, Minard.
Yes. It may not be straightforward, but central banks and financial regulators play an important role also in managing the impact of climate change, because climate finance is an important aspect of managing climate change, and central banks and financial regulators determine who has access to what type of financing. So it's good that central banks now are part of the COP discussions. I understand this started last year, then we have this year, and hopefully in the years to come, central banks and financial regulators will be involved in the COP. So climate finance, in climate finance discussions, let's always have an inclusion lens. And as Professor Dirk mentioned, it's also about not just inclusivity, but efficiency also. And the way I see it, I think the tone at the top is very important. So to push for climate reforms, of course, at the level of the national government, it's a push from the president. It's the president or the head of state. From the central bank or the government agencies, also strong support from the governor or the head of institution. And also at the level of the financial institutions and the banks, the strong push also from the board and senior management. And lastly, since I'm from the AFI data working group, I would like to also emphasize the importance of a research-based and data-driven approach to IGF. So collecting data both on the supply side and demand side. On the supply side, revisiting existing reporting requirements, and of course, balancing the need to not, unnecessary cost of collecting additional data from the financial institutions. And then on the demand side, I like the experience of El Salvador on incorporating resilience questions in the financial inclusion survey. And I think that's something that we should do, so that we can better understand the resilience strategies of the climate vulnerable sectors. And also, there are still many unanswered questions, for example, in terms of unintended consequences of greening the financial system. So we really need data. Thank you.
Yeah, I think COP has some significant meaning, but probably in a different way that is perceived by the outside. So in the absence of COP, promoting IGF is like sitting in a noisy room and trying to make your message heard. Yeah? This is something that we need to understand, that COP isolates all the other noises in a way. Yeah? So in this regard, we get a special stage for sending messages that otherwise would get no attention. But it's not the large-scale political agreement that I believe that deliver. it is the small businesses that deliver on these promises every day. And the large political agreements provide the framework, but none of the politicians is doing the changes on the ground. And the changes on the ground are only happening because the regulatory framework, the incentives, and the respective order in the countries asks them to do it, because otherwise they will simply not do so. So it's setting the right institutional preconditions, and here I'm believing that in this regard, it's really important that it is not the big headlines that make the change, but the small changes every day, aiming at impact, not so much at the headlines. And there's some tension in it. Yeah, when you look at what IGF projects are, and we had a wonderful conference last week where we were really looking at the complexity of it. IGF requires not only the farmer to change seeds, but also to change his whole distribution chain. It has to have a full different type of support infrastructure to achieve a traditional farmer to turn into a more environmentally friendly farmer. Or if you want to avoid let's say, pollution of water, it requires not one type of change. It requires thousands of little changes because it's simply impossible to build a very big cleaning device in the middle of the jungle. So there are thousands of users of the natural resource, of the public good, and that means everyone needs to change a little bit. And these little changes, they come about in the microenvironment, not on the big headlines. And I think this is something that we can take away from the COP, that the changes must come in the small steps. And every one of us can contribute a bit, but I'm thinking it's particularly helpful if the regulators create an environment in which efficiency, environmental aspects, and inclusiveness can go hand in hand.
Thank you very much. Yes, we have a comment. We can give you the microphone from here. Thank you.
So thank you very much for the discussion. I'm Juliette Nick from the University of Luxembourg, in the research team of Dirk Tetsche. And I'm wondering about two things. You mentioned, Dr. Gunaka, particularly digitalization, saying that there are lots of benefits that we have seen in the past, but also lots of challenges upon how to digitalize in a way that it's inclusive and, I guess, interoperable. I guess that is what you're facing. And I'm wondering whether you could tell us something about how to intervene from a regulatory perspective to manage that digitalization comes at its biggest or highest efficiency in IDF. And the second point I think you raised, Maynard, is about data collection. And I think this is really crucial, and this could be a good opportunity in this macro perspective we're just discussing, that it might make sense right now when we start IDF topics and when it's created to also agree on data collection approaches throughout the network at a similar level, because in our study on financial inclusion and financial stability, we're facing the issue that the core terms of financial inclusion, for instance, are not defined in a uniform manner. So this would be, when we create taxonomies, it might be a very crucial point to have these taxonomies aligned throughout different countries and working on the same level, because this will then also show the impact in 10, 20 years from now, right? So one broader comment and one question. Thank you very much.
Thank you for your observation with regard to the promoting the digital payments in countries like Nepal, given the difficult topography, geographic, the terrain. It is very difficult, but we can have some kind of the coordination between the financial and non-financial actors together. For example, at the local level, there are local governments. Previously, we didn't have that type of the federal structure. Only for the last 6-7 years after the new constitution that was promulgated in 2015, we have that type of federal structure. So those non-bank actors, for example, the local government, they can support the people to have the access to the banks, and they can help people to have some kind of the cell phone, the access, or how they can have, some kind of the incentive mechanism to bring in those people into the banking network. And if they have some kind of the products, if they have agro products, maybe they might have produced some vegetables or some crop, the food stuff. And if they are going to sell, then through the cell phone, they can transact, and then digital banking can be promoted in that way. So not only through the bank actors, not only through the regulators, but through the government and non-bank actors, their role is also very important, I think so.
Thank you very much, Dr. Gunakar. We are now approaching the end of this panel discussion. I think we've been through quite a lot together in the last 45 minutes, clarifying the links between financial inclusion and financial stability, climate change and inclusive green finance and financial stability. We've heard some wonderful examples of the work central banks are doing on advancing inclusive green finance. And also we heard the importance of peer learning, of together advancing inclusive green finance, not overnight, but over several years, and building the right national ecosystems to be able to implement inclusive green finance solutions. The importance of data and some very concrete examples about it. And also, we need to start somewhere. It's very easy to be intimidated by the task ahead of us in terms of green finance and inclusive green finance, but it's really encouraging to see so many central banks taking action and in kind of testing and learning and trying to get there, because it's indeed a part of the mandate, but also there's a fantastic opportunity for advancing financial stability, advancing development and prosperity, even in the face of climate change. And then the very last point of involving more central bankers and regulators in conversations like the ones here at the COP, and that's something we see a lot also on the national level. The central banks and financial regulators have an extremely important role to play in implementing nationally determined contributions, in being a part of setting goals for adaptation, in channeling finance and ensuring the regulations are in place to also be able to receive financial support in terms of climate finance. So the role is definitely there, but the coordination and the involvement might need to be even higher in the future. And talking about not being inclusive green finance overnight, it's really a great pleasure to have with us Mathilde Borde-Lawrence, Director of Climate and Nature Divisions at the French Development Agency, AFD. And she will be sharing a short statement of support with us. Thank you.
Thank you very much. Thank you for this fascinating and comforting discussion. I must admit that even if it was very noisy behind, it was really inspiring to listen to all of you as practitioners. I hope the audience online has had less background noises, but from where I sit, as the head of climate and nature at AFD, I have the honor to mobilize and to be part of a bank which has been very active on climate finance for a long time. We have taken the commitment to be fully aligned with the Paris Agreement right after the Paris Agreement was signed. Half of our funding is dedicated to climate finance. And at the same time, so it's approximately 7 billion a year. And at the same time, we are a development agency. So as a development agency, of course, the link and the importance of fighting against poverty has always been there. We had a look at our activities on adaptation finance over the past 10 years in Africa, and this ex-post evaluation was really clear that, okay, we did good, we started early on this topic of adaptation finance, we started early working in key sectors, notably the agriculture sector, but we were not good enough in reaching out to the most vulnerable people. So that's one key and very important frontier for a development finance institution, how to reach out to the most vulnerable people. The other very difficult and important frontier is the question of mobilization. Manuela, you used this word. We are limited in funding. I will never be able, as the French Development Agency, to do much more than 7 billion a year of climate finance. This is more or less the size of what we can do. So we have to use this funding with the highest efficiency as possible, as Dirk said, and to be able to mobilize throughout this. And mobilization, it's very much about working with the local financial system. So the answer to these two frontiers or barriers or challenges is one and only thing, which is working with an inclusive and sustainable local national financial system. And so for AFD, it has been very important in our strategy. We have a specific sectoral strategy on this topic to try to develop the work with the national financial system. We even built a coalition of banks, notably two coalitions, by the way, the International Development Finance Club and the Finance in Common initiative, building up on this aspect and idea that we need to work first and foremost with the local stakeholders of finance. And of course, as we were working on this, as a bank, we had also to transform ourselves because of climate, or notably to incorporate our own climate and nature risk analysis, to work with our own regulator. It became really obvious that working with the bank was not sufficient, so that a large part of this strategy to work with the local financial system had also to be handled with national regulators. And of course with Ministry of Finance, with all trying to work together on all the aspects of finance. So this is what we do notably in Rwanda, where we're working with the central bank, we're working with IREME, so we're working with the Green Fund, and we're working down with local authorities to try to go closer to the people on the ground, actually, and to have a look at the investment in the infrastructure which have impact on the field. This is also what we try, and we will try to achieve with Papua New Guinea. Thank you very much for this very interesting partnership that we are starting in your country. You've made it very clear how this work in Papua New Guinea can be really an example, actually, of what we can achieve in other geographies. And we hope, by the way, to work with you, with GGGI, also in other places, notably in the Pacific Island. And we have other examples. We are also working in the Caribbean, but I don't want to be too long on all this. So on all this work, you have referred to most of the tools that we are trying to build up. So working on risk assessment, working on taxonomies, working on insurance as well, which is indeed very important and relevant to this topic. So based on this spirit, I would say, of working on this financial system, working in collaboration. Of course, we have been very pleased to partner with the Alliance for Financial Inclusion since 2019. We completely share the same view, and the panel discussion today really shows it, that this is really instrumental and very important to do this hard work, to work on each and every country with the regulator. And so indeed we are very, very pleased to renew this partnership and this collaboration in the near future. It's not yet signed, but soon. And to work with AFI's Inclusive Green Finance work stream on all the topics that we have touched base upon in this discussion. Climate adaptation should be fair and inclusive, or there will not be increased resilience of the vulnerable population and communities. We share the same vision with AFI. So we really hope, and we thank AFI for this work, and we are looking forward to continue our collaboration in the near future with all of you. Thank you.
Thank you very much, Mathilde, and we're also extremely excited for this continued collaboration, especially on inclusive green finance. We are now coming to a close of the panel, and I will give the floor to Professor Tsetse.
Thank you very much. Thank you very much to our wonderful keynote speaker, to the panelists, to the partners in the room, to the audience, to everyone supporting inclusive green finance as a policy case, but also as a case to help mankind make progress on a prosperity level, but also on a level that deserves to be called humanity. Ladies and gentlemen, IGF is about nothing else than the original function of financial services, which is distributing scarce resources to the place where they make the most impact. And this is embedded in capital market theory already. We just need to get the conditions right. And this is the challenge, because whenever we make progress, every innovation comes with risks, every innovation comes with mistakes. But in the end, over several circles, several innovative cycles, we move forward. This has history shown, and we should not lose our belief that this is something that we can achieve. I think the common adage of today's panel is that actually we know what's right. We know the objectives, we know the direction we want to go to. What's left is implementation. Implementation doesn't come with large agreements. It comes with daily work, with small decisions every day. And this is probably the focus of the next years, going from principles to details, going from nice examples to full transformation. But overall, I think what we can take from this COP, we know what to do, let's get it started. Thank you very much for your attention.